Bismillahirrahmanirrahim. This is the first video on budgetary accounting, and we are going to talk at length about budgetary accounts, budgetary and operating statement accounts, two important terms, appropriation and encumbrances. We will talk about basis of budgetary accounting and GASB 34 statement. We will talk about statement and rules to record budgetary accounts. We are also going to talk about recording estimated revenues and appropriations. Then we will first do a simple illustration on journalizing budgetary transactions, post them in ledger, and prepare closing entries. Finally, we will do a comprehensive illustration on how to journalize and post transactions. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope that this video help aspirants of CPA, AICPA, ACCA and CMA programs. We also hope that this video help students of Masters in Financial Accounting, Masters in Taxation, Masters in Governmental Accounting, and students who have joined training courses of Saudi Organization for Certified Public Accountants, SOCPA, and other accounting program aspirants. We also hope that this video help fresh graduates who have joined the governmental or not-for-profit organization. Let us start with what are the state government financial statements. A budget is a future income statement. The significant difference between the income statement and the budget is that income is a historical record of revenue and expenses, while the budget is for the future. In governmental accounting, a budget is the record of future revenues and expenses. So the purpose of the budget is to record the future inflow and outflow of what they expect to receive and what they expect to spend. Budgetary accounts are the accounts of the budget. It is a record of the budgetary inflows and outflows that are estimated or authorized in the annual budget. Budget is a record in the general ledger and is not just a memo. This is important in the governmental accounting because the government wants to promote the budget. They want the citizens to know the operations of the government. However, please note that it is a part of general ledger, but it's not a part of the financial statement, and we will explain this later in this video. There are 5 budgetary accounts, and let us talk about each one of them. First is the estimated revenue. Please note that it is estimated revenue and not just a revenue. Estimated revenue is the revenue to be raised during the budget period. that is how much amount the government is planning to raise, and since this is estimated revenue, this account will have a debit balance and not a credit balance that revenues have. Next is the estimated other financing sources. In governmental accounting, income or revenue from sources other than revenue is other financing sources. They reflect anticipated inflow of resources other than revenue, like a bond proceeds. So through bond proceeds, money comes in, but not as a revenue. Next is the estimated other financing uses. Just now we have talked about estimated other financing sources, and now we are going to talk about uses. Now these budgetary accounts reflect anticipated outflow of resources other than spendings on operations like bond payment. So bond payment is not a spending on operations, rather it is estimated other finance uses. Please keep in mind that budgetary accounts are closed at the end of the period for the same amount, and we will talk about it later in this video. We will also talk about encumbrances and appropriations in a while. But before that, let us talk about operating statement accounts. Revenues and expenditures are different from estimated revenue and estimated expenditure. Estimated revenue are the budgetary accounts, and they don't go to financial statement account. Rather, the estimated revenues when closed increase the fund balance. Revenues and expenditures are the operating statement accounts, and both are recognized on the modified accrual basis. Revenues are recognized when measurable and available to pay current period obligations, and expenditures decrease fund balance when closed and are recognized if expected to be paid from current available resources of the fund. So far, we have not talked about the two budgetary accounts, that is encumbrance and appropriations. Let us talk about the two now. An appropriation represents the maximum amount of expenditure that entities are authorized to spend. Governments, while preparing the budget, decide the maximum amount they are going to spend on a specific activity. It is a legal authorization granted by the legislative body to incur liabilities for purposes. They can't go over this. This is the maximum limit. This is the legal authorized grant by the legislative body to incur for a purpose. The authorized body cannot spend more than this, or they will be penalized. The fifth and the last budgetary account is the encumbrance. An encumbrance is an estimated amount recorded for purchase orders, contracts, or other expected expenditures chargeable to an appropriation. So once the amount is appropriated, the authorized person will start spending for the activities the money is appropriated. But before they actually start spending or places an order for purchase, or before they sign a contract, they have to go through the encumbrance process. It is a control mechanism to prevent overspending. So, entry is made when purchase order or a signed contract or a commitment is made. So, if the appropriated amount is suppose 5 million, and an expenditure of 1 million is to be made in the first quarter. So first of all, 1 million will be encumbered from the appropriated amount, and the balance appropriate amount of 4 million will be left, and this is to be spent for the remaining part of the year. The entry reduces the budget available for expenditure. We have appropriations. From appropriations, we subtract the encumbrances, we subtract the actual expenditure, and this gives us the funds available to be spent. Any outstanding encumbrances are reported in the notes of the income statement. Outstanding encumbrances are reported in the notes of the financial entity. Outstanding encumbrances is a commitment that was made but was not fulfilled by the end of the year. Remember, encumbrance is a budgetary account, and we can say that encumbrance validates the appropriation. Next, let us talk about basis of accounting for the budget. Neither GASB nor FASB have control over budgeting principles. The government entity decides on the method of the basis for the budget. GASB does recommend to use the modified accrual basis of accounting. However, most government use the cash basis for the budget for two simple reasons. First, people understand it, and second, that is, the people are familiar with what they have paid and they are not much familiar with accrual or modified accrual basis of accounting, as the bills are paid in cash. And the weakness of cash method is there, and it could be easily manipulated. But we are not going to talk about it at this moment. As per GASB 34, it is required to show the actual results and the original and the final appropriated budget. The government will make sure that they have procedures that will safeguard the budget, that is, whatever they have decided to spend, it spends appropriately. Next, let us talk about the rules to record budgetary accounts. Let us see how a budget is recorded. First of all, the adopted budget is recorded in the general ledger at the beginning of the fiscal year. General fund at the beginning of the fiscal year. So first, the general entry is made for the estimated revenue, and the estimated revenues are debit. And as the government earns revenue, the estimated revenue is reduced by actual revenue received. So estimated revenue is debited at the beginning of the year, and actual revenue is credited as it is received during the period. Let us look into an example first of all. Assume an entity called Tiny Town that performs a single function, public safety, and has only a single department, the police department. The approved budget for the general fund is as follows. We have the estimated revenues, we have property taxes, we have miscellaneous, and then there are appropriations. So the general entry will be, estimated revenue is debit, and appropriations and is credit for 990,000, and the difference is the budgetary fund balance, and this general entry is to record the budget. The debit to estimated revenue predicts that the actual revenue will be 1 million. That would increase the fund balance by 1 million. Like planned revenue, the planned expenditure, that is budget appropriations, will be recorded as budgetary fund balance debit and appropriations is credit by 990,000 to record the appropriations. This journal entry identifies the amount of net assets that Tiny Town plans to spend during the budgeted period. So they are going to spend 700 on salaries, 190 on material, and 100,000 on police cars. Please don't forget that this is the expenditure that is predicted and authorized for the period. They cannot spend more what they have been authorized, and if they do that, they are going to be severely punished. Note that the credit balance of the budgetary fund balance indicates that Tiny Town has a surplus budget. In case appropriations are more than the estimated revenue, then budgetary fund balance will have a debit balance indicating a deficit budget. But in this case, obviously, this is a surplus budget. Recording estimated revenues help in budgetary control, as the officials can compare the estimated revenue with actual revenues to ensure that the estimates are met. At the same time, recording appropriation also help in budgetary control, as it ensures that expenditures are made as appropriated and within the limits of the appropriated amount. Let us first see how recording estimated revenue help in budgetary control with the help of an example. And you can see that they have the revenue through property taxes, and the estimated revenue is 900,000. We have debited estimated revenue by for the property tax 900,000, and this is how it is going to be recorded in the general ledger. So the estimated property taxes to be collected is 900,000. On January 5, they have collected 300,000. So the estimated revenue to be collected reduces from 900,000 to 600,000. And on January 10, they have collected 500,000 more. So the estimated revenue to be collected further is 100,000. Next, let us see how we record appropriations. Now, appropriations are credited, and we subtract the encumbrances from appropriations. We subtract the actual expenditures from appropriations, and we get the balance available for expenditure. So in this example, we have an appropriation, and the appropriation is for they have received material. Okay, so for the appropriation for material was 190,000, and it starts with a credit in appropriation. And before I go into the encumbrance part, I would like to show how we record the purchase of supplies in a business entity and in a government entity. Now, when a order is placed, we do not make any entry in a business organization, but in the case of government, the moment we plan to place the order, we have to encumber the appropriation for the cost of an order. Once we receive the order, we are going to reverse the encumbrance in government entity, and since there is no entry before that, nothing is going to be done over here, except that we are going, once we receive the order and if we have not paid in advance, so we are going to record the liability for the purchase, and the same is the case over here as well. We record the liability for the purchase. If when the business entity is going to make the payment of this liability, we are going to record payment of the liability, and the same is going to be done in a government entity as well. And then there will be series of entries to record supplies used, and this is going to be both in the case of business entity and a government entity. So what we can see is that there will be 3 transactions depending upon how much it is used in a business entity, while we are going to have 1, 2, 3, 4, 5 entries in the case of a government entity. Now, suppose they have placed an order for material for 25,000. So when they are placing an order for material for 25,000, you see no entry is going to be made at the time we place the order. But in the case of government entity, budgetary fund balance reserve for encumbrance is debit and encumbrance is credit. That is what we have done. We have recorded the encumbrance. Then when we receive the order in a business entity, material is debit and accounts payable is credit. But when it comes to government entity, we don't just say material but rather expenditures. Material is debit and vouchers payable. We have vouchers payable in the case of government entity. Generally in business entity we have accounts payable. And when we pay, obviously accounts payable is debit and cash is credit. In the case of government entity, vouchers payable is debit and cash is credit. Next, let us do some journal entries for budgetary accounting. A city government incorporates its budget in its accounting system and encumbers all commitments prior to the start of the year. The city council adopts a budget in which city revenues are estimated to be 500,000 and the expenditures will be 450,000 were appropriated. Record the budget using only the control accounts. Okay, so we have an estimated revenue of 500 and estimated revenue is debit, and then we have appropriated 450 to be spent, so appropriation is credit, and since our estimated revenue are more, so the fund balance is credit by 50,000. Now you may be wondering how the government comes up with the number 500 or 450. So this is what they have planned, that they are going to generate a revenue of 500,000 and they are going to spend 450,000, and this 500,000 of revenue will be generated through taxes, licenses and permits, intergovernmental revenues, charges for services, fines and forfeits, and miscellaneous revenues. And if you make the total of this will be equal to 500. Then this revenue is going to be spent on general government, and the maximum amount to be appropriated is 120, for public safety 150, we have public works 100, and culture and recreation is 800. And once again, you can see that the total of these appropriate accounts must be equal to the total appropriation. Now, at the end of the period, this same original budget will be closed regardless of what has happened during the year. The original budget will be closed for the same amounts that are here, and we will show you in a while. And as the appropriation is a budgetary account and should be taken out of the ledger, and we will explain with the help of an example. Don't worry for this part that how we close these accounts. Next, let us look into some general entries on budgetary accounting. Okay, so we have taken 5 different transactions. A government healthcare district incorporates its budget in its accounting system and encumbers all purchase orders and contracts. It encumbers all. Prior to the start of the year, the government board adopted a budget in which agency revenues were estimated to be 5,600 and the expenditures are 5,550. They were appropriated. Record the budget using only the control accounts. Now, since they are spending less than what they have so far, so there will be a fund balance of 50, and this entry will be called the original budget entry. Rather, this is going to be the first entry as such. Don't forget that we have to reverse this entry exactly for the same amount at the end of the year. So we have estimated revenue debit, appropriations credit, and the fund balance is credit. Now, transaction number 2, during the year, the government healthcare district collects 5,800. Now, you see the estimated revenue was 5,600 and they are collecting 5,800. So, they are collecting more than what they have estimated in this illustration, and they are collecting it in the name of fees, grant, taxes, and other revenues. So, cash is debit and revenue is credit. Then we have transaction number 3. In it ordered goods and services for 300,000. Don't forget that first of all we are going to encumber. So encumbrance is debit and budgetary fund balance reserve for encumbrance is credit. The appropriated amount of 5,550 is what they can spend. Rather, this is the maximum amount they can spend, and from this they have already placed an order of 3,000. So we have recorded as a budgetary fund balance reserve for encumbrance, and it is going to be reduced by this 3,000 amount, and the balance left for our appropriation will be 5,550 minus 3,000, that is 2,550. Okay. Let us look into the transaction number 4. During the year, it received and paid 2,800 for goods and services that has been encumbered. It expects to receive the remaining 200. So the encumbrance was for 3,000, and from this 3,000 they are receiving goods for 2,800. That means still 200 is left to be received during the year. So first of all, this entry is going to be reversed, and we are going to reverse by the amount of material we have received, that is 2,800. So budgetary fund balance reserve for encumbrance is debit and encumbrance is credit by 2,800. And once we have reversed the encumbrance, we are going to record the the payment, and you can see here that they have paid 2,800. So expenditure is debit and cash is credit. If they don't pay it, then obviously vouchers payable will be debit. Then we have transaction number 5. During the year it received and paid, okay, they have received and paid 2,800 for goods and services that has been incurred. It expects to receive the I repeated the same transaction. There is a mistake on my part, and let me make a transaction for this one. So it can be like this: it incurred 2,500 in other expenditures, not expenses, for goods and services that has not been encumbered. Now you see in transaction number 4 there is an encumbrance, and in transaction number 5 there is no encumbrance. So in this case obviously we are just paying the amount. So for the expenditure, so expenditure is debit and cash is credit. In the next slide we are going to discuss how to close these entries. So I have simply copied the journal entries that we have made just now, and to use this space we are short of space on the screen. So rather than writing the full form of budgetary fund balance reserve for encumbrance, it is written as budgetary fund balance reserve for encumbrance. So BFBRE is budgetary fund balance reserved for encumbrance. So the same journal entry that you see over here is presented in the slide over in this part. Same journal entries, and we are going to make the ledger accounts first of all. Now we have estimated revenue, and this is debit. So we have transaction number 1, and the amount is 5,600. Then we have appropriation, and this is credit for 5,550. Then there is a fund balance for transaction number 1. This is credit by 50 again. Then we have cash. This is transaction number 2, and this is debit for 5,800. And then we have revenues, and revenues are credit. This is transaction number 2 for 5,800. Then we have encumbrance for debit for 3,000, and budgetary fund balance reserve for encumbrance is credit by 3,000. Then we have budgetary fund balance reserve for encumbrance debit. So we have 4A, and that is debit by 2,800. And encumbrance is credit 4A. This is credit by 2,800. Next we have expenditure is debit. So this is 4B, and this is debit by 2,500, and cash is credit by 2,500. So that's how we have recorded we have recorded the ledger, and we are going to prepare the closing entries. And don't forget that we are going to first of all close the we are going to reverse. I told you just now that we are going to reverse the original budget entry. So and this is the original budget entry. We are going to reverse when we are closing. So appropriations is debit by 5,550. Fund balance is debit by 50, and estimated revenue is credit by 5,600. This is we are going to adopt the first method first of all. So let us record this. We have appropriations, and appropriations is debit, that is A1 by 5,550. Then we have fund balance debit, this is A1, and this is debit by 50. And then we have estimated revenue A1, and this is going to be credited by 5,600 Then we are going to close revenues. We are going to close the encumbrance, and we are going to close the expenditure. These are the accounts to be closed. So we have a revenue of 5,800. So this is going to be, so now revenues will be debit, and they will be debit by 5,800. Encumbrance, you see, still we are left with 200. So 200 is what we are going to credit for the encumbrances, and this is going to be A2 journal entry. So encumbrances is credited by 200, and so we have 5,800 encumbrances, and then we have expenditure. And expenditure is going to be credited by, so this is again A2 2,500, so that is 2,500, and the remaining is going to be the fund balance. So 5,800 minus I missed one part. There is an expenditure of 2,800 as well. So this is 4B, not 2,500 but 2,800. And then we have expenditure number for transaction number 5, that is 2,500. So the total balance is going to be 5,300, and this is going to be A2. So this is not going to be 2,500, rather this is going to be 5,300. So then now the fund balance 5,500 5,800 minus 5,500, that is going to be 300. Okay, so this is the first method of closing the entries. First of all, I repeat again, we close the original budgetary entry, we just simply reverse it, we do nothing more than that. And then we have to close the revenues, encumbrances and expenditures, and then there will be we will check out the fund balance, and you can see that the fund balance is going to be in the credit for A2, fund balance is 300. Okay. Now we are going to adopt another method, and in the second method we are going to close the revenues, and we will be closing the revenues by our estimated revenues against estimated revenues. So revenues are debit, rather I should, so again we will be having the same information as it was before. We have estimated revenues. Let me clean up. So we have estimated revenue, and estimated revenue in transaction number 1 is 5,600, and there is an appropriation transaction number 1 5,550. Then there is a fund balance, and fund balance is in the credit for 50. Then cash is debit, transaction number 2 for 5,800. Then there is revenue for 5,800, that is credit number 2, and this is revenue for 5,800. Then we have encumbrances, that is transaction number 3, and this is for 3,000. And for transaction number 3, budgetary fund balance reserve for encumbrance is credit by 3,000. Then we have 4A, and in this case it is debit by 2,800, and encumbrance is credit by 2,800. Then we have expenditure, and this is 4B. I will not repeat the mistake. Expenditure is debit by 2,800, and cash is credit by 2,800. And again we have expenditure debit, transaction number 5 for 2,500, and cash is credit before transaction number 5 by 2,500. Okay, and now we are going to close. So we are going to close our, first of all, estimated revenue is debit, and this is going to be closed estimated revenue by against our estimated revenues, our actual revenues. So in this case B1, transaction number B1, revenue, to close it, B1 revenue will be debit by 5,800. So revenue is debit by 5,800, and estimated revenue will be again B1 will be closed by crediting it by 5,600, and now there will be a fund balance of 5,000, that is 200, and we will record in the fund balance 200. This is B1. Okay, and then we are going to close the appropriations. So appropriation will be closed. We have B2, appropriations will be debit by 5,550. So appropriation is debit by 5,550, and we are going to close appropriations against expenditures and encumbrances. So for B2, encumbrance balance will be 200 that we have not received. So encumbrance is credit by 200, and then the expenditure B2 5,000 expenditure is 5,300. So 5,000. So still we have a fund balance of 50, and that's how they are going to debit. So we have B2 fund balance credit by 50, and you can see that the fund balance, whether you use the first method or the second method, the fund balance is 300 in either case. 300 is here and 300 is here as well. So that's how we prepare the closing entries for the budgetary accounts. We have two methods. In the first method, we are going to reverse our original entry, and in the second method, we are going to close revenues. We are going to close our estimated revenues, and we are going to close the appropriations, and we get the same result in either case. Let us now solve a comprehensive illustration, and for your convenience, I know some of you may find difficult to read my handwriting, so I have put this in a sheet to make you understand or to see the things done more clearly. Okay. Next, we prepare a comprehensive illustration. Look into a comprehensive illustration now. Tiny town performs a single function, public safety, and has only a single department, the police department, and these are the estimated revenues, these are the estimated expenditures, or the maximum amount of expenditure for each head. And since the estimated revenue is more than the appropriations, there is an increase in the fund balance by 10,000. And then these are the several transactions that has taken place, and we are going to look into each one of these journal entries first of all. And don't forget that first of all we are going to prepare the original journal entry. And so estimated revenue and miscellaneous revenues, property taxes and miscellaneous revenues are debit for 900 and 900,000, and then the appropriations for salaries, materials and police car are credit, and the balance is credit again, as the total of credit is less than the estimated revenue by 10,000. Then we record each one of these transactions. The property taxes of 500 are received in cash, and when we receive in cash, cash is debit, and revenue property taxes is credit by 500,000. Then we place an order at an estimated total amount of 46,000. Now when you are placing an order, so first of all there will be an encumbrance. So you can see we have encumbrance police cars is debit for 46,000, and then budgetary fund balance reserve for encumbrance is credit by 46,000. Next is January 12. Police cars ordered on January 8 are received at an invoice cost of 45. So we have received the whole transaction. So first of all we are going to encumber, we are going to reverse this journal entry. Budgetary fund balance reserve for encumbrance is debit, and encumbrance police car is credit. And then we are going to record the expenditure. Since we are not paying cash, so expenditure police car is debit and vouchers payable is credit. Then they have received 13,000 for miscellaneous revenues, and so cash is debit and revenue miscellaneous is credit for 13,000. Then two more cars are ordered at an estimated total cost of 54,000. So encumbrance is debit and budgetary fund balance reserve for encumbrance is credit by 54. And then they are receiving these cars in the next transaction for 55,000. So first of all, this journal entry is going to be reversed because the transaction has been completed. So they have received the whole order, and then we are going to record the expenditure is debit and voucher payable is credit for 55,000. Then they receive the property tax of 399, so cash is debit and revenue property tax is credit. Next, they are placing an order for 15,000 for material, and when they are placing the order, that means that again we go for the encumbrance. Encumbrance is debit and budgetary fund balance reserve for encumbrance is credit by 15,000, and the order is received with an invoice of 16,000. So first of all, the encumbrance will be reversed as we have done before, and then we are going to record the expenditure. So for the receipt of the material, so expenditure is debit for 16,000 because we are receiving material for 16. And next, finally, they are paying the salaries. Now for salaries, like this is a transaction where you don't expect any change in the payment for this particular expenditure, that is salaries. So that's why we don't record encumbrance for salaries. So salaries expenditure is debit and cash is credit. In the next transaction, on the next slide rather, we are going to post all these journal entries into the general ledger. And what you can, I have simply copied all these journal entries and then recorded them, and you can look into the how different they are when we prepare the general ledger in a governmental accounting. You can see that there is a difference format for the revenues, and for these are for the revenues. There were two revenues in this illustration, and then for the appropriations, again you see we have a different template, and I'm going to explain each one of them. Now the first journal entry over here was the original journal entry for the appropriations for the original budget. Estimated revenue as debit, so I have simply copied over there. We have estimated revenue, miscellaneous, and then there are appropriations and a fund balance. So we have for the revenues we have property tax, and on January 2, this is what they have budgeted, that they are going to receive 900,000 from the property taxes or through property taxes. And then there will be miscellaneous revenues of 100,000 as well, and that is also budgeted for 100,000. Then there are appropriations for salaries, we have for materials, we have for police cars. And you can see that again the appropriation is 700, 190, 100, and that's how this is what you are going to spend during the year, the maximum amount you are going to spend for salaries or materials or police car. Then in the second transaction, you have received cash for property taxes, and in this is the second transaction, January 3, we are receiving cash 500,000. So cash is, we have a cash receipt of 500, and now you have to collect another 400,000 from property taxes during the year. we go to the next transaction, and in the third one there is you have placed an order for which you have created an encumbrance of 46. So this is for the police car. So we already have the budget of 100,000, and from this we have encumbered 46 that you have set aside. That means now you have a remaining balance of 54,000 to be spent during the year under the head of police cars. We move on to the next transaction, and in this transaction we are receiving the cars, and when we receive the car, first of all we are going to reverse the encumbrance, and you can see that we have, first of all, once we receive, we are going to reverse the encumbrance. 46 was debit, now it is credit, and when you credit we are going to add up to the available appropriation. So again you have 100,000, and from this 100,000 you have made an expenditure of 45,000. So that is 45, and now we have a remaining balance of 55,000 to be spent during the year. Next we have received revenue from miscellaneous sources, and that is 13,000. So we already have budgeted 100,000 from miscellaneous sources, and we received 13,000 cash. So still we have 87,000 to be collected during the year. Then we go to the next transaction, and again we are planning to buy the car. So we have for 54. So again there is an encumbrance for 54,000. So encumbrance is debit, and you can see that we subtract from the available appropriation, and we are left with 100,000. Next, they are receiving these cars, but they are receiving the cars for 55,000, and let us see over here. So first of all, the encumbrance has to be reversed. So before it was debit, and now encumbrance is credit. You can see over here, encumbrance is credit for 54. We add this again to this available appropriation. So we have 55, and from this 55 we have received cars for 55. So we have spent all the money that was allocated for police car, and we have not spent more than that, because in government you cannot spend more than what has been appropriated. That is a serious crime. Okay, next is we are receiving cash from property taxes for 399, and you see cash received is there. So of 399, and now we are left with 500 more to be collected from property taxes during the year. Then again we are placing an order for the material, and when we are placing an order for the material, again there is an encumbrance for the material for 15,000, and we are left with 175,000. Next, we are receiving the material, and once we receive, first of all the encumbrance will be reversed. So you can see that now encumbrance is credit, and this amount is added back to the appropriation. That makes 190, and then we have received material for 16,000. That means we still have 174,000 to be spent under the head of materials. Finally, there is salaries, and you can see for salaries we have not recorded encumbrance, because these are going to be the there is no need to go for estimation. You know how much salary we are going to pay. So expenditure salaries is debit and cash is credit. So we have a budget of 700,000. From this we are paying there is an expenditure of 60,000. So still we have 640,000 to be paid under the head of salaries. So this is how the whole picture is going to look like. After these transactions, the task is to collect another 500 for property taxes, another 87,000 from miscellaneous revenues. You have to spend 640,000 on salaries, 174,000 on materials, and nothing to be spent on police cars. So this completes the first part of budgetary accounting. And in the next video, we are going to solve exercises on budgetary accounting more comprehensively. But I believe that you may be having a good idea about how budgetary accounting is done, how we prepare the journal, what is appropriation, what is encumbrance, and how we close these entries. And I hope you have enjoyed this presentation. And if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com, and accounting is AK. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment section below or send me an email, and inshallah I will reply you back. Thank you so much and happy learning.